Good morning, everybody. How you guys doing? Happy Tuesday. Happy Tuesday. So, we have quite a bit to discuss. We'll talk about the market. We're definitely going to talk about AM Mick Sizzling Biscuit, and we're going to go from there. There's a couple penny stocks that moved this morning that we will also touch on along the way. But thanks once again for tuning in, everybody. Alrighty, so the first thing that we're going to do is we are going to go over the market. So let me put this into full screen. Alright, so yesterday and the day before, so on Sunday night, we had recommended that you were going to want to be long bias the market at that price. So on Sunday, the analysis was the market would sell to here, and then you'd want to be long bias here. You'll see by the end of the day, the market has broken up. Okay, so the market came down to its desired selling target, entered its buying target, bounced overnight. This red line up here, also the after hours high last night on the NASDAQ, is the gap fill. So if we look at the daily chart here, so we're going to go to the daily chart. We're going to zoom in. You see these two like gray lines, okay? So the price from here to there was the gap that was created in the market from Sunday to Monday, okay? Yesterday, Monday, we traded down, we bounced up overnight from yesterday till this morning and filled that gap. So the gap in the market has been filled, all right? At the top of the gap will be this red line, okay? So when we go look at the 1 minute chart, you will see that the after hours high is right at that red line. So the market Sunday to Monday gaps down, hits support, bounces overnight, fills the gap. So I am already in a short position on the market from pre-market. We are already bearish the market. And so the reason we're already bearish the market is because I still believe the market is downtrending. I believe that this sell-off, its first initial downside target was the mean. That's why we recommended you would be long yesterday. So you came down to the mean, which means usually you're going to bounce. So we bounced. We filled the overnight gap from Sunday, but the market is still in a downtrend. We have not put in a higher low or any sort of thing that suggests we've fully reversed. The only thing we've really done is a bounce. And since the market's down, I'm only treating it as a counter trend bounce in the overall downtrend. So therefore, we are bearish the market, anticipating that this downtrend is at least going to attempt to continue down. After the attempt to continue down fails, provides a higher low, then we might shift back to being like more bullish, anticipating markets have actually bottomed. So nonetheless, we are bearish the market. So if in the event I'm correct and the markets are really supposed to be bearish, we should go back down to the prices of 353.46-ish. Actually, it's probably a little different. Let me readjust. Okay, so if I am correct and the markets are going to continue down, all right, then that means they would break this low, which means they would target back to the mean, which is at the price of this. So this would be the current support of the market. Okay, this is the current support on the market. So again, if I'm right and the markets are going to continue downtrending, we should see the market back down to retest those prices. I'm not too certain on the play, so I'm just bearish for now. And if we do magically kickstart a move and start swinging lower, great. But for now, I do know that the only support I have in the market is still down at about 353.83 to 352.82. Good morning, everybody. Michael Ernest, I'm already in the queues on a bearish trade. Alrighty, next one on the list we will discuss is AMC. So here's the deal. We want to be long bias AMC. I haven't paid enough attention to AMC alongside of the actual big indexes of the market to come to any realization that AMC follows with market sentiment. So I'm not too sure about that. So I'm just going to say it anyways. If the markets do continue to be bearish, as I'm thinking they might, or we attempt to go bearish, I would imagine AMC would still have some negative effect with that, whereas it will see sympathy. So we want to be long bias. I believe if the market does not get smoked today and it stays up and it has a decent day, we can continue seeing AMC move to the long side. So the only reason I want to be long bias AMC is because we have come down. Oh, by the way, yesterday the recommended buy prices for AMC was this zone. At market open, one of the levels adjusted. So before market open, we recommended this is where you wanted to buy AMC. At market open, this top line actually adjusted and the price was literally right at 31.15. So that's what happens with my analysis from time to time, is at market open, some of the levels will update slightly, which means you don't always get the exact analysis by the time the market opens. They can always be a little off. But this was the recommended, essentially the recommended buy zone for AMC yesterday. So we have bounced where we should have, which means support did hold. Today would be you as an investor trying to trade into AMC for continuation on the long side. You're not in the low risk zone. The low risk buying zone was yesterday. That's why we recommended watch AMC bearish down to this point, and that's where you would start to consider to be long bias for the bottom. Now you're looking for continuation off of the move for yesterday. The only resistance that I have for AMC right now would be at the prices of $39.29 to like $38.50. So if we're correct and this is a true double bottom, we should see the prices of AMC in the near term future back up to prices of 38 to 39. So I want to be long bias on it, but the long today is not as good or as low risk as buying the long yesterday at the recommended like kind of dip buy zone. So you're into a higher risk area because you're trying to trade a continuation move in the hopes that it's going to continue, as opposed to being some of the investors that are supporting the stock off the actual support. So with all that being said, we're pretty much just long bias AMC off the double bottom with a max price target on the day and just for now of $38 to $39. Okay. Good morning, good morning, good morning. Mr. Alaskan Bull, no worries, because we're actually going to be we're going to be ending our premium service at Boiler Room Trading. We're only going to be offering the Elites program, the day trading course, and then all of the custom scripts that we already have. And then everything that I was generally doing in premium, I will be moving over to YouTube. So I might offer like some sort of subscription through YouTube. I haven't really decided on that. So there will be more information on that to come. But nonetheless, I will be moving or taking the time that I would spend doing, stuff through my business and moving over to YouTube. I do believe in the long term, I could actually see more growth this way from a business perspective than if I wasn't spending as much time on YouTube. So nonetheless, that's kind of where I'm at in business stuff. Good morning, Mr. West. Not Kanye, okay. Thoughts on Adobe, so ADBE. All right, we're going to take a look at Adobe here. So, market strong. There is a divergence, so you're starting to see negative divergence on the 4-hour chart, or you have been, which still hasn't really performed into a sell-off, but So here's one thing to note that's a bearish signal. If you look at the RSI here, you can see that it's been downtrending since about last month, 2 months ago or so. We've kind of been downtrending, and while the market's been going up, those can be signs that the markets are going to reverse. Okay, but let's also check the daily chart. So if we go to the daily chart was not showing a divergence as early as the 4-hour, which is to be expected. Anything that's a smaller time frame, you will get more signals more frequently as opposed to longer charts. So if you look at something like a 20-year weekly chart, it would take a long time for a divergence to appear on a 20-year weekly chart as opposed to like a 10-day chart, right? So you get more signals way more frequently on smaller time frames. So the 4-hour chart's been indicating a bearish reversal signal for, let's say, 2 months. The daily chart, which should take longer to form a signal, has only just started forming a bearish divergence since the beginning of this month on the 7th. So from this point to here, we've been starting to form a divergence. We are also on the green line, which means we're at +2 deviation resistance. So let me mark that in. So there's that. Hold on. The markets have also gotten bearish recently. 1 second. So I'm going to do this, and I'm going to say we got a bearish move coming on Adobe that I would assume pulls back towards 585.16. So that's on the assumption that this bearish divergence we've been seeing is actually going to give you a slight correction, maybe down to 584.49. But overall, I'm still bullish on the stock. So I would be bullish the stock on this trend, but I do believe you have a correction coming. And you are into high buying prices, so I wouldn't see this as a low-risk buying zone to capitalize on the trend. I believe that this current trend you are seeing is coming near an end where you will see a correction on the price. So nonetheless, market's still bullish because it hasn't corrected, but I do see bearish movement coming because we are at +2 deviation on the daily, which means you only have one more deviation up till you get to 3 deviations. So nonetheless, I would be more of a seller at these prices. Lisa, no name. It just means you have to subscribe to the channel. So if you subscribe to our channel, then it will allow you to chat with us. And really, that's just a way for us to either keep out some spammers and hopefully get more subscribers. See, that would be you see that, right? You see what I was talking about earlier? Oh, wait, no, that wasn't with you guys. It was with somebody else. Never mind. But, see, the sales pitch, right? The sneaky snake oil sales pitch would be subscriber mode only is on so that we can prevent spammers from coming into our chat room and promoting more things, right? That would be the sales pitch you would say to a customer. But in reality, the likelihood that more people subscribe to the channel is slightly higher because if people want to chat, then they have to subscribe. So really, it's a trick for me to get more subscribers. But in doing so, it does also prevent some people from getting in and spamming comments and things like that. But really, the main benefit is hopefully more people subscribe. And if you go to another channel and they tell you otherwise, well, they're just leaving out that small little bit there. Alrighty, so that's why the subscriber mode is on, but it will also prevent jackasses from hopefully coming into our chat because you have to be subscribed for 5 minutes before it'll allow you to chat. So anyways, cool. Yeah. 20 minutes till Bezos takes off. Good call. All right. We are going to pop on over to INMN. This guy. So I don't think I'm going to be long biased this anymore. All right. And if there is a long move, I think it's going to be a very hard to trade long move with a max price of 25.34. So pretty much put it this way. Since this morning when INMN was trading up at a price of here, my max target was this red line. So the top red line on the screen that you can see, that would be my max long target for INMN. You can see we got to 24.37, which means we didn't actually hit the resistance, which does still pose the risk of this squeezing up to the price target. So nonetheless, I am actually bearish on the stock INMN overall. Still optimistic you'll see like a squeeze candle up to 25.28, maybe slightly over, and then the market swings down. So I'm overall bearish, but I do see that the market can still pop up and maybe confuse some people. So this is like if you wanted to be short, right? If you think the stock's gonna crash and you wanna go short, right? You're shorting right now, you still run the risk of a big ass candle going up to 25.37 and then swinging down, right? So that's my max long target on the day for INMN, and the reason being is because if you go to the 4-hour chart, you will see that that is exactly where the regression trend is at, which is slightly over the previous top here. So you have regression mean resistance right there, and you have it on the daily chart. So the daily chart and the 4-hour chart both have the same mean price resistance. So the same trick that I used to predict exactly where the bottom was going to be in the market on the NASDAQ. Now that's the NASDAQ. So literally predicting the bottom of one of the biggest market indexes, basically to the penny, is the same exact thing that I'm telling you right now on INMN. So the same thing I used to predict the market bottom that I was off by 3 cents 2 days before is the same thing that I'm telling you now with INMN. We've just bounced back to the mean, which generally is a resistance. There are also very big breakout points. So on the off chance that you're extremely lucky, you might get a breakthrough 25.26, and that can be a big move, but I don't see it this time around. But I could be wrong. You've been subscribed for like a year. So does that mean you were unsubscribed, Lisa? Did you have to resubscribe to the channel? Please let me know, because I'm very interested to know if you had to resubscribe to the channel after saying you've been subscribed for a year. Because then that would just further validate what I've been telling all of you, is that somehow magically people get unsubscribed from our channel. I don't know how. Maybe it's just unlucky. They're on YouTube. They meant to smash the like button. They click unsubscribe. I don't know. Who knows? All right. So that was that stock. The other one that's like kind of, keeps tickling me is NRBO. So this is a penny stock that gapped up overnight, and I believe this could have a move. It definitely seems like one that has potential. I don't actually think it has any news. It could have been from yesterday though. So 7:20. No news. So this is a no news mover. So this is something that honestly probably be a little more skeptical of now. I thought it didn't have news, but I was just double checking. So if we look at this time frame here, it's a 180-day 4-hour chart. You're going to see this orange line coming into play on NRBO at the price of $3.86. So that pretty much means that $3.86 is your current resistance in the market. So right now you want to be breaking through 386, 385, and then that move is going to take you up to the pre-market high of 421, because 421 is the daily chart resistance. Wait, no, that's wrong. I don't know why the pre-market high is there. Never mind. I shouldn't have a price target there, so it would be up to there, and then daily chart is up to this guy there. So pretty much put it this way, if in the event we do magically get a breakout on NRBO through the 385 price, the max long target for me would be up to 419 to 440, 439. All right, that's NRBO. There was MDWD, right? So MDWD is a penny stock. It's a low float stock. They had some news about a phase 3 trial, I believe, for pediatric study of Nexobrid for Eshar removal met its 3 primary endpoints for degree statistical significance. I mean, just a lot of big words there. I don't like that. It's just too hard for me to read. So anyways, this is a very low float stock and it's easy to borrow. This is something that just kind of feels like it might turn into the old McBoomstick today. I don't know. So it's low float. It's got some pretty good news. It's easy to borrow on my platform, which in other words means that there is going to be participation from people using the Lightspeed brokerage company on the short side today. Okay, people will be shorting this. Hell, I might be shorting this. Hell, I might be losing money on this. Fuck, I might get divorced after I play this. But that's okay, ladies and gentlemen, because I still have you guys to hit the like button. So with that being said, we will watch MDWD, low float, has some news. It's shortable on Lightspeed, easy to borrow, which means easier to bet bearish, which means more people can participate on the bear side, which means which means there's more bearish traders, meaning more people to squeeze short, okay? So the price levels that you're going to be looking at for this, it would be the price of 543 right now, and 565. So pretty much that is the current resistance of the market. So if you can get up and through this point here, if you can get through this zone, your next target's going to be here. So this, the way to say this would be this on MDWD is your resistance zone, and then if your resistance zone breaks successfully, this is your target sell zone. Okay, so you have resistance. Through that, you would target up to that price for the time being, which is 620 to 640. Do I own any long-term stocks? I mean, yeah, I do. I have a long-term portfolio with about 400,000 in it. I have another portfolio I started when I was 18 that probably has like 30 grand in it. Then I had another one I started a year ago just to see how robo-advising would do that has about 30 grand in it. So overall, I probably have close to $500,000 invested long term via 401k, Roth IRA, and individual investment accounts. Oh, and then I have a SEP IRA that I forgot about, but that just has money in it that really I haven't done a lot with, so it's kind of pointless to be there, which I'm considering canceling and moving elsewhere. So yeah, so I do own a lot of long-term stuff. I own stuff in emerging markets. I have to recheck my portfolio again because I don't know exactly what's in there. But I own emerging markets, foreign stocks, U.S. stocks, bonds, ETFs. I mean, you name it, pretty much. It's just everything. DOS, or no, I'm using I think it's DOS on Lightspeed that I'm using. So that's a good question, Kelly. If a stock hits a predicted price target but doesn't hit it on its bounce down, will it eventually get there, or do we start the standard deviation method all over again? I can't really answer that question fully because it's slightly confusing and there's so many situations that it could be different. But whenever a price, so like this, right? Like if you look at this. This is a situation where I thought this morning we could see MDWD get to prices of like 620. It didn't get there. So that to me means, okay, well, yeah, maybe it still has the opportunity of getting there. Maybe it just shied it here and this isn't legit, but we want to come back up to it later. So that's the way I look at it. Or like, if a stock comes close to bouncing a support but doesn't actually get there, then it's going to bounce and swing back through that low to retest it. A good example of this would have been on the market from a couple days back, I believe. So let's look back 10 days, 1 minute. I should be able to find it. I'll remember it when I see it right there. Oh, where'd it go? No. Where are you at? It was this day. So on this day pre-market. I had recommended that the support that you wanted to buy into on the market was here, literally. Then the market came down, it bounced here. So you can see like my price zone was down here. We bounced here. So it's like, yeah, we kind of bounced near the support. So it gives a good bounce, but then it swings through, tags the actual support, and then it goes.
So there's situations you will see like this where the market gets close, bounces, then swings through it, then goes. So when the market comes down, doesn't quite touch support, bounces before, if I'm trading that, or if I find myself in a position on that sort of situation, I normally only try to trade like the first initial pop. I don't try to wait for like a big pullback and a higher low, because if we actually haven't touched the support, then I know there's still the good chance we can swing through and get it. So if it shies resistance or shies support and I take a position, I'm usually kind of on edge, and I'm very, I can't even think of the right word, but I'm just like hyper focused, because I know that it could just be a very short term one as opposed to the big primary trending bounce, right? So that's kind of how I go about doing it. So you have to, and the reason I'm saying that is because if everybody thinks this is the bottom and they all buy this before support, then that means as this starts to come close to their buy zones, they're all going to stop out, and that's what creates the selling pressure to actually break the low. Everybody who bought here are the ones that end up selling and stopping out and making the downward swing to the actual support. So like in this moment in time, right? Think about this, right? Everybody who bought this dip on the Qs that morning was like, okay, cool. All their stop losses, where do you think their stop loss is at? It's somewhere below like these green candles, right? So we already know where their stop loss is at. It's somewhere below those green candles. Look at how aggressive the candle gets as soon as we crack those two like little red lines. We get a big ass down candle with a gap. So a bunch of people just stopped out. And then look at where the stop out candle goes to. That line, which at the time was our support. And then it just instantly rips back up. So everybody buying this bottom, not everyone, but many people buying that bottom have stop losses here. They stop out. Their stop loss selling pressure is what the market makers use to drag the price down to the actual support and then bounce the market. And that's all that we have there. What time is it? 8:58. Okay. Yeah, I just use TD for charts. Yeah. Sometimes I'll do a swing trade on TD because there's no commission, so I might do that at times. But yeah. Yeah, that's probably pretty much it. I don't really see a whole lot more that we probably have to discuss today for the time being. Oh, what the shit! What the tickle my pickle! Look at that, ladies and gentlemen. Wait, can I just, before we go, can I get a round of applause in the analysis with NRBO? Would anybody here care to give me a thumbs up or maybe say kudos, congratulations on the analysis? Because we did just tell you that once you broke 385, you would see a target of 4. Look, it's at the fucking penny. Literally, the high is 420. The fucking penny to the penny. Who does that? Who does it? Come on. Let's be honest. Who does that? Who tells you the pennies it's going to go to before it goes there? I mean, just fucking crazy. It's crazy, bro. So anyways, look at this, right? So think about this. A lot of videos on YouTube, you might have learned on the internet, what are they telling you right now? That the pre-market high breakout is where the breakout's at. No. The breakout was 385. The internet will tell you the breakout's pre-market high. No, pre-market high is fucking resistance. If you're lucky, it breaks the pre-market high. And then that move would probably only go to 440. So if you're someone trading for a pre-market high breakout in this situation, and you wait for it to break 420, the market makers will use your orders to help move the stock towards 440, giving you usually a pretty shitty fill. So let's say you go for the breakout of 420, you're going to get 5 cent slippage to 7 cent slippage, so you're going to get an entry of say 425 to 427. The move is only calculated to go up to 440, so from 427 to 440, what is that? That's 13 cents. So now you have 13 cents potential profit up. You still have the spread to deal with on the exit. So let's say you lose another 2 to 3 cents on the exit up towards 440. Now you only have room for a 10 cent profit before this shit starts swinging back down. And that's why a lot of times it's very hard for people to make very consistent trades around pre-market high breakouts. It's because if you wait for the breakout, then you get a shit fill, and then you have to exit. And if you try to exit, then you're going to get a little slippage there too. So you get slippage on the entry, slippage on the exit. And if you're buying over the breakout, the market makers use your orders to force the breakout, which means you don't get the fill at the breakout price. You get the fill over the breakout price. And that's about it. Cheers, everybody. Have a great day. I will see you guys back tomorrow morning for another pre-market watch list. And other than that, you guys have a great day. And keep it casual. Keep it casual.